Welcome back to another video. Today we are going to take a look at the US oil from a fundamental, technical, as well as an order flow perspective. And if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, starting on the monthly time frame, what do we see? Now, from a monthly perspective, we can obviously see how the market printed this massive impulse. And after an impulse, you expect a correction before that continuation to the upside. Now, we can also see how the market had tested, how the market had tested and rejected the strong level of resistance. And once resistance gets broken, it then becomes support. But when it comes to fundamental data, technical analysis is actually no match for fundamental data, so we can probably expect the market to go and continue higher there as well. And from a weekly perspective, what do we see now? From the weekly time frame, now we can see how firstly the market at first printed this massive impulse and that correction. Now if you take your Fibonacci from the low to the high of the impulse, you can see how the market not only tested and rejected the strong level of the resistance that was tested as support, but the market had also come to test the 78.6 and the 61.8. Now if you take your Fibonacci from the low to the high over there, we can definitely expect for oil in the long term to go and hit $140 a barrel. Now if you drop down on the daily time frame, what do we see? Now firstly, we can obviously see how the market had come to test that level quite aggressively. The market had also printed this structural level over here that had acted as support got broken, and all of that supports now turned the resistance, and we can see how the market had broken and is going to close above that level. Now the best way to approach the situation from a technical perspective is to wait for the market to pull back slightly and then start looking for a buying opportunity for the market to continue to the upside. In doing so, the market will also print this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Now that is how we're going to approach the situation from a technical perspective. Now if we look at the order flow data, so the commitment of traders, and this tells us what the biggest banks, hedge funds and institutions are doing in the market. We can see it based off last week's report. Now we know that previously they had come in and they closed some long positions over here, as we could see there, but then we could also see how last week they actually came and they added 8,541 long positions. And we can also see how they went from adding buy positions to actually closing buy positions. We can see how the overall net positions went from minus 1.5k to now sitting at 10,201, giving us an indication that we can definitely expect the price of oil to increase and go and hit 140, but first go and hit this 130 over there as well. Sorry about that, ladies and gentlemen. So that is what we can expect here from a technical and as well as an order flow perspective. Now if we go look at the fundamental data, we got a headline here from seekingalpha.com. It says your oil tears higher amid Ukraine tension and attacks across Saudi Arabia. Now if there's one thing that you must keep in mind, if you haven't really noticed that, is that investors are very fearful, and when they hear speculations like this, they tend to run on the back end of that as well. Now this article basically tells us that the rebound in oil prices are continuing this morning as the war in Ukraine approaches the end of the first month, with no conclusion in sight there as well. Now this war has been going on for just about a month now, and there has been no progress that has been made. Now this is a clear indication of what it is that we saw over here. This massive impulse that we had here was speculation. This massive sell-off was due to Putin or Russia and Ukraine making like they were gonna talk, but nothing actually came from it. Now this is a clear example of what they mean, that when investors are greedy, then they start buying prices like this based on speculation. And just as Ukraine and Russia started to talk, they started selling because they thought that they were going to come to an agreement. And now we find out that there's no movement being made, so they just played with us at the end of the day. And that is why it's important that we are reactive and not predictive. Now the best way that we are going to approach the situation as well, if you take your Fibonacci from the low to the high, we can definitely expect a pullback in this market starting from that level over there before the continuation to the downside. Now I want to say thank you so much for your time. If you enjoyed the video, please smash the like button for the YouTube algorithm, and as always, cheers for ears.